Banks' total loans to hit 24 trillion naira by 2021. Forex interventions give false hope on naira, says IMF. Nigeria's third quarter oil export rise by 56%. Oil prices edge up on hope vaccines will improve fuel demand. Details of this and more on Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Lack of accountability and transparency in public finance will continue to serve as a clock in operating all systems devoid of corrupt practices in Nigeria. To effect a change, key players are advocating an improved financial process that will spur economic growth and development. Abolade Salami reports.
World and emerging economies in the year 2020 are at a difficult financial challenge as a result of the global pandemic. While this lasted, there were several allegations and counter-allegations of financial recklessness, unaudited accounts, lack of transparency on public finance by some ministries and agencies. In addressing public finance management and public governance practice, the Board of Professional Accountants in its index for the year 2019 identified lack of proper monitoring in budget execution, absence of external audit supervision, and non-availability of policy-based fiscal strategy as some major challenges causing a setback.
There's no state governor, there's no government in this country that will say for us to have an effective public financial management system in place is not in the interest of the country. So for them not to provide the information or not to put it in the public domain as is expected.
The index report in its 5 pillars assessment ranked Kaduna State on 72%, followed by Enugu, Jigawa, Niger and Kwara states on 58%, 55%, 53% and 50%, while Edo State ranked last with 15.1%.
The effect it will have, everybody will see it, and will see those who have performed and those who have not performed. The next time we go to any state and we say that we are going to do it, the governors and the operatives of government will take us more seriously. Because we have to all shout out loud about this matter.
The index report suggests a review of some obsolete laws in the context of recent global and local developments in order to ensure adequate public financial management.
The International Monetary Fund (IMF) has warned that regular foreign exchange intervention to Nigeria and other emerging economies create false sense of security and hope on the local currency. This is coming as Nigeria, which operates a flexible exchange rate regime, spends about $16 billion annually to defend the naira. A large part of these forex interventions are auctions at the interbank spot, sale of dollar for invisibles, small and medium enterprises, bureaus of exchange, investors and exporters, forex window and forwards. In a joint report released at the weekend by IMF Director Monetary and Capital Markets Department, Tobias Andren, Director of the Funds Research Department, Jita Gopinath, and Director of the Strategy Policy and Review Department, Sila, the trio said that while flexible exchange rates can act as a useful shock absorber in the face of capital flow, do not always offer sufficient insulation. The IMF team also said in a continuous effort to help countries manage volatile cross-border capital flows, it has taken a major step towards a new analytical macroeconomic framework that can guide appropriate policy responses. To further shed light on the economic implications of the recently released IMF World Bank report and possible way out is an economist, Paul Alaje, who joins us from Lagos. Paul Alaje, you're welcome to Business Express.
Thank you so very much for having me.
Thank you too. Well, IMF acknowledges the effects of COVID-19 on the economy, and it is gladdening also to see some key steps being acknowledged. Revision of the budget, one, priority spending and removal of subsidies on the fiscal side, while on the monetary side, subsidies on CBN credit interventions, regulatory forbearance, and accommodative monetary stance. What is your take on these?
Well, thank you once again. Most of these concerns have been expressed on many channels, newspapers. We have written and we have also mentioned to authorities that we need to brace up in this economy so that some of the things IMF and World Bank are releasing regarding Nigerian economy may not be. But that said, the monetary stand has been that government should reduce subsidy, which of course was taken until government announced that pump prices will reduce to 165 naira, which could be partial returning to, in our own understanding, partial return to subsidy era. But government have said no, that is not returning to subsidy era, but perhaps because of a festive period. So there is no certainty as to what is the decision will be. The truth is that the pandemic, talking about COVID-19, has battered Nigeria on all sides. And an economy that was volatile and was not able to grow up to its population growth rate, it felt not so very good for us. And when you look at what Monetary Authority has been doing to see how to protect the naira by intervening in the market, while fiscal and trade arm has not significantly improved output, particularly as it affects trade and export. All of this is coming back to have tremendous negative effects on the economy at the end of the day. And that is why when we say that there is need for communication between monetary and fiscal authority, we are not saying they should meet in a boardroom. We are saying policies of monetary authority and fiscal authority should align. There should be an alignment of policy in order for us to achieve the same goal. And I hope that in the coming period, we will start to see this policy alignment between both authorities. So a lot has been said. I don't want to belabor the issues. The report is there for all concerned, particularly economic watchers, policymakers, and all of us to see. I think it's time for us to look at this overall reflection. The bottom line, our economy is driven by an exogenous factor. What that means in economics is a factor that we cannot control, a factor that we cannot change alone, a factor that depends on what is outside our jurisdiction. What do I mean by that? Crude oil prices. Because crude oil prices went so low, it had tremendous impact on our exchange rate. And everything is exchange rate. Everything is exchange rate. Because of our consumption, because of our import, everything today is exchange rate. So I don't know. I only hope that in the coming period, we are going to see a meaningful change or a significant change in performance of the economy. But right now, we can only but wait and watch to see what authority will decide or what authorities will do.
Okay, while we watch and wait, you say such projections might not actually come to pass, but at the same time, you've also expressed fears that if the right decisions are not taken and taken fast, we might actually go that way. Be that as it may, balance of payments as well as inflationary pressure were pointed out as concerns also. How are they affecting recovery drive?
It is obvious that we are not doing enough in terms of trade, either trade or balance of payments. So Nigeria seems to be on deficit on both sides. I don't also want to talk about the issue of debt. It's also a major issue, major concern for Nigerians as a people. So So for me, it's a lot of concern. And if you don't produce significantly up to the point that we have export promotion, that is not what we are seeing right now. And I am not seeing, I'm seeing some level of action by government. But some of this action, most of this action, in my own opinion, is still a way of us trashing the solution on the surface. The real solution is for us to grow this economy. I will put it in the language I've always made it be. We need to change the conversation of our economy from agrarian base, from oil base to manufacturing. And to talk strictly to the solution, we have countries such as Indonesia, we have countries such as China. This country has refused to go into recession, and they were equally affected by the pandemic. Why? Because the economies there are producers-oriented. They are export-oriented. While the whole world was afraid of the pandemic, these economies were busy producing for the world in form of face masks, in form of sanitizers, in form of what the world will consume. The world has changed to a global village. It is it that can produce the most, particularly for the rest of the world, that will be the master of the universe. And I hope that in the coming period, we will change our orientation and our performance as an economy from that which is consuming in nature to start which we start producing. This is the missing link. And we have said it in the 60s till now, the line is still missing. That role is still missing. Until we are able to provide that solution where we will consume, not just to consume what comes from abroad, but to look at what we are consuming the most as our production. One of the things we consume the most, by the way, is refined oil. And you know, it's according to note that a country that produces oil, in terms of crude oil, for years, for more than 14 years, I still finding it difficult to refine the same. We have 4 refineries. As of today, none of them is functional. It's worrisome and it's disturbing. But you know, numbers don't lie, figures don't lie. We may go to school and play. At the end of the semester, at the end of the term, the report card is what we judge. For Nigeria, the report card is not looking good. That is what we are faced with. That is the exact thing that is happening to the economy this moment today. And I think this is what IMF and World Bank is talking about. And that's why we continue to see unemployment grow. So for me, if you want to employ people in their number, Indonesia's population is larger than that of Nigeria. The same with China, population is larger than that of Nigeria. What are they doing correctly? Is production, is manufacturing. Brazil is doing the same thing, production, manufacturing. India is doing the same thing, production, manufacturing. We cannot want to consume the best thing of the world, the best car in the world, you know, the best houses, and we continue to import all of these things. Government orientation, particularly private sector, was changed from that which just wants to consume to that which wants to produce. And you start seeing Nigerian businesses looking outside a consideration within Nigerian population, but fighting with African population of 1.2 billion people, and more importantly to the whole world, which of course is attention of most countries that refuse to go into recession and are not totally battered by economic woes. You saw what one of the reports said: Nigeria have now resorted to less dignified jobs in terms of agriculture. Meanwhile, at home, we are celebrating that people are going into agric. Meanwhile, when you look at the quality of jobs, somebody who earned 30,000 naira before the announcement of inflation and before recession, it's poorer today because exchange rate is much, much worse than what we had. So if you convert the pesos monetary value to what it was before the inflationary period, and also convert it before we had negative growth rate, we see that the person is worse off today than it was in the previous period. So the solutions are there. Government must do what it must do. Talking about production, government, particularly state and federal government, must provide power supply for private sector to thrive. They must also look at what our problems are, and from that create innovative solutions in order for them to in order for them to solve most of the problems.
Okay, Mr. Paul.
I give you another one. 30 million pupils, and they will be going on break very soon because they are in school right now. Most of this fabric that they wear, they are sold in Nigeria, but the fabric itself comes from outside Nigeria. And we need to start looking at these problems and solve them deliberately. The West Central Bank have partnered with rice farmers, and government must do the same. Insecurity is there, it's not a conversation. I think we can continue just within this program alone.
Okay, Mr. Paul, looking to learn from countries like Indonesia and a few others who have refused to go into recession because they have planned ahead because of the structures they have on ground. You would agree with me then that structural and monetary policy reforms need to come in to unlock these potentials. I would mention a few of those steps that you think should be taken. Share your thoughts on what more needs to be done to ensure that we really boost our manufacturing subsector.
I must be very sincere with you. The backbone of every strong economy is manufacturing, production, education. Those are the backbone of any strong economy you want to see. And the way you lay the foundation, you don't lay the foundation anyhow. Not that tomorrow we say let us go and manufacture. Technical school, we predate that. Creation of technical school. This is what China did. It is what Indonesia copied. Indonesia repeated it. It succeeded. India is repeating it, and they are putting this in ICT, and they are also succeeding. Nigeria must copy after those who through diligence and patience are receiving the promise. This promise of prosperity and taking people out of economic quagmire is what we must do. But there is nothing people can do without strong fiscal, monetary, and trade policy. These policies must be robust. These policies must be all-inclusive. And I have seen a number of intention and, of course, good policy made by central banks if we want to equate them to significant parts of monetary authority. But we still need more to be done in terms of fiscal authority. We need our budget to be revised. We cannot continue to spend 70% of our budget on consumption, and even now more than 70% of our budget on consumption, and the remaining is going into capital expenditure, which is less than 30%. That's on one hand. On the second hand, we talk of issue of debt. Well, we may not do without borrowing, but what are we borrowing on? And I give you an instance. When you look at the impact of debt, according to Debt Management Office, when you compare in the last 6-7 years how we have borrowed and the impact of this borrowing on the economy, how we have borrowed, the rate has grown by over 16%. But when you look at growth rate in terms of the economy, it's only 1%, which means there seems to be loopholes. Even the money we collect, corruption, and party giving contract to cronies and friends is one of the setbacks that we have in the country, and we must solve these problems head on. We must say the truth to ourselves that you will be reckoned with and become the most desirable place for people to live in on earth. We must take the decision. It's a painful decision, but we must take that
Mr.
decision
Paul,
to stay by the truth, and of course,
Mr. Paul, yes, in taking this decision, you mentioned earlier on that everything is about exchange rates. Do you think there is a need for a convergence of these exchange rates? Briefly.
Well, if you look at, if you want to find convergence of this exchange rate, it's going to be worse. I have said it before. Central Bank said the Nigeria want to go for a milestone emancipation of Naira, and it went to over 200. And I told Nigerians that interviewed me at several platforms that you will never see exchange rate go back to 199 Naira that it was, as against the hope that was built. Today, parallel market, which may not be the standard market, but in reflection of the truth, it's about 470 or more as of today. I am only expecting authorities to take decisions as much as the exchange rate will want to reflect the truth. The important thing is that there is no way you continue to reflect the truth because the market itself is lopsided. Nigeria is not producing sufficiently enough, and when you don't produce and export to the rest of the world to depend on us, exchange rate will continue to go down. So in the interest of the people, perhaps is why Central Bank of Nigeria has tried to defend the Naira so that most of the things we have will not be worse off. It could be good news for some few individuals and government. When we sell oil, the money will look much.
Mr. Paul, what you are saying in essence is enough of spending a lot to defend the Naira. Thank you so very much, Mr. Paul Alaje, for sharing your thoughts with us.
Thank you so very much for having me.
We'll do this again.
Thank you, sir.
Thank you. Moving on, the British pound rose against the dollar and the euro on hopes that Britain and the European Union will secure a free trade agreement after their decision to extend negotiations beyond the Sunday deadline. Let's now see how the naira is exchanging for other international currencies. While gold eased on Monday as the rollout of coronavirus vaccines in the United States lifted risk sentiment, offsetting support from hopes for more U.S. economic stimulus and a weaker dollar. A total turnover of 2.265 billion shares worth 20.990 billion naira in 23,722 deals were traded last week by investors on the floor of the exchange. Over to Moplang Dakok for details.
Trading on the equities market closed southward in the week ended 11th December 2020. The NTA All-Share Index depreciated by 2.53% to close the week at 34,250.7 basis points, while market capitalization dropped to 17.9 trillion naira. A total turnover of 2.2 billion shares worth 20.9 billion naira in 23,722 deals were traded in the week by investors. The financial services industry measured by volume led the activity chart with 1.8 billion shares valued at 14.9 billion naira traded in 13,602 deals. The consumer goods industry followed with 116.4 million shares worth 2.8 billion naira, while the third place was occupied by the conglomerates industry. Trading in the top three equities, Jais Bank, UBA and Zenith Bank accounted for 894 million shares worth 7 billion naira in 4,045 deals. A total of 292,510 units of federal government bonds valued at 2.2 billion naira were traded in the week in 45 deals, as well as 13,555 units of exchange-traded products valued at 17.3 million naira in 8 deals. 13 equities appreciated in price. 46 equities depreciated in price, while 102 equities remained unchanged in.
On the Nigerian stock market, trading closed upbeat to begin the week. The NSE All-Share Index inched up 1.37%. Market capitalization went back to 18 million threshold at 18.2 trillion naira. Investors traded 200 stocks in Asia Pacific saw gains in Monday trade as investors in the region react to the approval of Pfizer's COVID-19 vaccine. Bosiri Abel reports.
Britain and the EU agreed on Sunday to keep negotiating over a Brexit trade deal, taking talks to the wire as key differences remain. Sterling bounced on the news, but UK Prime Minister Boris Johnson still warned businesses to be ready for a no-deal exit on December 31 when the transition period ends. European stocks traded higher in early Monday trade as market focus remains on negotiations between the UK and EU on post-Brexit trade deal. DAX rose 0.8%, FTSE 0.26% and CAC 40 0.76%. Stocks in Asia Pacific were mixed in Monday's trade as investors in the region react to the approval of Pfizer's COVID-19 vaccine. Shanghai Composite gained 0.66% to 3,369.12. Nikkei gained 0.3% to close at 26,732.44, while the Hang Seng Index dipped 0.44% to close at 26,389.52. U.S. stock futures moved higher early Monday as markets indicated a rebound from a losing week. Investors are weighing updates on the COVID-19 vaccine rollout, as well as coronavirus stimulus stalemate in Washington. Dow futures pointed to an opening gain of more than 200 points. S&P 500 futures and Nasdaq 100 futures also both traded in positive territory. On the African continent, stocks opened mostly positive, with South Africa's JSE Africa Top 40, Namibia's overall index, Ghana's GSE Composite, Nairobi's All-Share and Tunisia's Tunidex posting gains. Bossode Able, Business Express.
This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizX. Business Express returns Tuesday by 9:30 a.m. Be safe out there. I am Benny Adams saying good day.